Hello and welcome to our latest market alert for FX traders. Today I want to speak about the pound ahead of what could be a potentially huge event for the currency. Tomorrow, which is Thursday the 2nd of November, at midday we have the Bank of England rate decision where they're expected to increase their rates for the first time in more than a decade. As you can see, as I've written here, there's more than an 85% probability for a hike according to some derivatives markets, and this could have a really big impact on the pound. If we go to the calendar tab on our Xstation platform here, you can see at midday, as I said, the official bank rate from the Bank of England is expected to be lifted to 0.5% from its present level of 0.25%. Now, with this widely expected, this could in itself not be that market moving, so there's other things to look out for which could really drive the pound. First off, I'd look for the voting pattern. See these three numbers here? The first one represents how many people support the decision to raise rates. The second one is how many abstain, and the third one how many people oppose it. You can see 6 people on the 9-person committee are expected to support the rate hike, with 3 opposing. Now, if we have greater support for this, so if we have 7, 8 or even 9, then that would be more positive for the pounds. It could be suggestive to see that there'd be further rate hikes in the future. Alternatively, if we have less support, so say 5, 4, or if we even fail to see a rate hike as we did last time with just 2 people calling for a rate rise, then this could be negative for the pound. So if we turn our attention back to the charts now, here's a daily chart of the pound US dollar. You can see last meeting that we had back in September, we saw a huge move higher in this market as the pound surged due to strong hints from Governor Carney and other NBC members in the statement that we would get a rate hike soon. You can see the market raised from around 130, 150, almost 500 pips, making a high just over a week later around 136.50. Since then we've pulled back somewhat and the market is now consolidating, and we're in a range with possible support around 133.20 and a fairly key support level to look for on the downside, 130.62. Now if we do see a break above this 133.20, we could get another move back up towards the highs, whereas if we get a rejection here we could see the market come back down and test what has been a rising trend line going all the way back to the lows seen back in March. Now, from the US dollar side of this pair, we have some US dollar events coming up for the weekend, such as non-farm payrolls on Friday. So some traders may wish to avoid the pound US dollar and look at other crosses. Another market that I think is a potentially interesting level going into the Bank of England is the euro pound. So here, obviously, pound stem relates to a downside move, whereas pound weakness would see this cross move higher. You can see the last meeting here when we had the rally in the pound, we got a strong move lower. We fell back down and we're now retesting this potentially key support level at 0.8725. If we do get a break below here, there could be substantial downside with not much by the way of swing support to this low here around 0.8345, and this could also be seen as a neckline and a potential head and shoulders reversal formation with the shoulder here, the head at the recent highs, the second shoulder there. If this head and shoulder pattern plays out in a textbook fashion, then you'd expect a move of almost 600 pips to the downside, which take us down to the low 0.80s. Alternatively, if we get something negative for the pound, then we could see a move higher. If we can see a breach back up through the 0.8865, we'd move back above the 200-day SMA, this yellow line here, which you can see we just dipped below yesterday after being above it for the previous few months. And if we do see a move above here, then that could be a continuation of the rally seen throughout this year. Finally, just to provide some long-term context, I want to speak about the pound Japanese yen. You can see here again all the way back to last summer when we had the Brexit vote. This is now a weekly chart, not a daily chart. We had a huge down week. As you can see, the market tumbled from a high of around 160 all the way down here to around the mid 130s. We've had some sort of recovery since then. At the last Bank of England meeting, actually, when they hinted at a rate hike before the year end, we saw this huge move higher, almost a 1,000 pip gain in the week, and we smashed through previous resistance around 147.30. We've since come back and tested this level, which is now potentially key support, and on the upside, if we look around the highs from that week, around 152.50 as possible resistance. If we do see a break above there, then we could get back up towards the 160s, and notice almost coincidentally, we are now trading around similar levels to we were the week ahead of the EU referendum last year. Okay, thanks for listening and best of luck if you're trading this event tomorrow.